Okay, good morning, everybody. Looks like we are all set here and good to get started. As always, welcome. My name is Jared. This is Engineering the Markets. It is June 23rd, 2022, and we will take a look at what the market has to offer for the rest of the week, along with some of the performance we've seen this week, and maybe what to anticipate moving forward as we navigate this current bear market. First things first, let's start off with the S&P expected move. The market has priced in approximately a 120 point expected move this week. That's allocated here. Remember, we got this number based on the Friday close pricing of the S&P index option market, along with the fact that this is a shorter trading week. The overall volatility and expected move was a bit lower than the prior week. But we've also noted a couple times that recently the S&P expected move has not been a great indication of how the market will close week to week. We've seen multiple breaches and 2 to 2.5 sigma expansions over the past couple weeks, most of which have been either to the downside, or we've seen most of our breaches kind of test the downside initially. There's an example here where we got outside of expected move. There's an example here where we actually closed outside of expected move. And then, of course, last week or 2 weeks ago, we had a very significant breach and closure, along with the prior week coming outside of expected move and closing approximately 2 times outside. So what this means is we're using this as mostly a gauge of whether or not the market is doing a great job pricing volatility, or if they're still experiencing inefficiencies. And overall, what we're looking for is maybe 1 to 2 weeks of stability. Stability would often come in the form of closing inside the expected move, and that's something that we've yet to see recently. So quick note for today, the S&P did tag the upper bound of the expected move. So as far as trading strategy and technique is concerned, this might be sort of an upper bound for the market to have a lot of trouble getting over. But if we still see inefficiencies this week, remember that an expansion can occur to the upside, and we could see at the very least one trading day outside of this range before potentially coming in on Friday. So keep that in mind as you're trading this week. We're also running into a fairly significant swing low, something that the market had difficulty getting over before. And as we are kind of bumping into this area, the main thesis of potentially reversing our downtrend still remains intact, where bulls are basically trying to defend the recent significant lows we've seen, along with expanding through our channel. So just as a reminder of what that looks like, the S&P has sort of two trading channels that I think are of relevance both this week and bigger picture. For one, we have the shorter term channel that was starting to form. This is mostly going to be seen whenever you have larger buy and sell swings. The trading channel kind of defines the risk profile of being long or short during that period of time. What you'll notice is yesterday we were able to clear the upper bound of this potential trading channel. And what would really confirm us being outside is back testing, which we are starting to do in pre-market, along with clearing the first expansion high. That would basically mean, from a technical sense, we are no longer concerned with this channel, and essentially it can be removed from the chart until other structure is formed. Additionally, you'll notice that some of the sell swings are starting to form bit of an upper bound trading support, a trend line that's defining the higher lows. So bulls are certainly buying, quote unquote, the gap downs and some of the dips. We're seeing just a return back to some semblance of a standard, or basically the mean of a lot of our larger trade. And when we look at the bigger picture here, the idea is fairly straightforward. The short in this market has a lot of risk at this lower bound, simply because this is where bounces in the market tend to form. It's where the market tends to sort of counter the dominant trend, which is still, of course, to the downside. So we'll be looking to see how we sort of consolidate in this area. Really nothing of major import yet from a technical sense, but we are reclaiming some ground along with that back test, also lining up quite well with our channel. This is something that usually has a little bit of nuance because this is a daily trading channel. We're looking at the hourly. So the trading candles are sort of defined more so on the higher time frame, but you can see the confluence of support here. We have our lower bearish channel that broke bullish, along with a longer term bearish channel that's trying to reclaim. So these are all some points to sort of remember today as the market is opening with another gap up open. We have a decent pre-market trend, a nice sort of 3 hourly candle upside so far in the S&P. And the market is looking to open in a more bullish posture. However, we've also seen how easily the market can draw into VPOC, which has been, I would say, identified over the past 10 days as approximately 375. So, obviously there's lots of data at much higher prices. The market really didn't leave a lot of transactional value in these areas as it waterfalled to the downside. But more recently, 375 is our value zone. You'll notice lots of confluence here, along with the market consistently returning to this price in intraday trade. So keep those numbers in mind. Keep some of the concepts in mind, because ultimately, if the market can't expand today, we're very likely to just return back to about 375. And then obviously a more bearish intent would be us selling through 375 and coming back into a lower liquidity zone, potentially even coming to retest 365 over the next couple of days. So as a kind of a shift of what we normally discuss, it's worth mentioning some of the performance this week, because what has been essentially a market where certain sectors are providing some safety and obviously some portfolio protection, that has been changing. And while this is preliminary, it's very early readings of weakness. It's noteworthy to look at things like sector performance over the past week and just showcase that energy has been basically the worst location for the past week. Now, you compare that to maybe a month, and you'll also see that energy, based on its recent drawdowns, is actually seeing its worst monthly performance relative to the rest of the sector performance and the rest of the market. Now, obviously, there's no sector here that is green, so that is just a nuance of the fact that most sectors are experiencing larger drawdowns at this time. But it showcases that what was once a bullish market has actually been suffering in regards to performance as of late. Now, whenever this starts to happen, we can look to other techniques. And one thing I like to do is look towards where do we sit in regards to an economic and a market cycle. And if we're seeing some shifts in what sectors are leading, which sectors are lagging, maybe new sectors starting to gain a little bit of spotlight, that's where we can start to postulate what might be next on the docket. And for me, whenever I see energy taking down to this degree, especially over the past couple of weeks, it starts to put into question whether we're looking at energy being in its bull market moving forward, or is it more distributive? Are we seeing maybe some profit taking, larger money supply starting to leave, and maybe a bit of rotation into new sectors? Now, normally what you'll notice here is that when the market is topping, aka the end of a bullish market cycle, you'll start to have energy and staples be your leaders. This essentially states that while the economy may simply be on the upswing, and that's indicated by this blue cycle crossover here, the market itself is actually starting to top and or correct. Now, since we are technically, and from a percentage drawdown in a bear market, it's pretty easy to see that we're somewhere along this area of the cycle. We're either, somewhere right here, maybe we're a little further down, we're somewhere near midline, if not deeper into a late stage bear market. And the question then becomes, what sectors could perform, or at the very least hold better inside of a late stage bear market? Normally, this will be highlighted at the beginning by healthcare. Healthcare tends to be sort of the transitional sector, the one that as we're entering a bear market, you'll see that healthcare starts to perform, along with some more defensive sectors, things like utilities. But as we sort of enter the later stages, finance actually becomes a bit of a standout as we start to recycle through economic expansion. The idea being usually the sector performance will lead the economic performance in regards to what's actually going to be a standout sector. So, without going too much into this, this is basically a full course study of sector rotation and analysis. What we're seeing over at least the past couple of weeks, and you'll notice this on the monthly performance, is healthcare has been holding up quite well. Let me change back to a brighter color. Healthcare has been holding up quite well. It's not necessarily the absolute leader, but we are seeing similar ideas in regards to staples actually leading, even though we're not seeing them actually perform. They're not green for the month. They're just holding up better than the S&P. But when you shift over to a weekly performance, maybe a shorter time frame, this will actually start to shift a little bit. And this is mostly something noticed over the past couple of days. Healthcare has been a leader over the past couple of sessions. The bullish performance we've seen in the S&P has been coming from healthcare. It's been coming from discretionaries as well. And as I mentioned, as long as technology isn't down, the S&P has a chance to stabilize. So short term, we're getting a bit of a shift here into what the market is valuing, both in a short, bias mindset, along with potentially looking ahead. And when we shift back to our charts, when we're talking about healthcare, what we're talking about is, for the most part, XLV, or the healthcare sector for the S&P 500. Now, remember, this like anything has respective components. It has higher weighted elements inside of it. But when you look at maybe the top three holdings here, J&J, United Healthcare, and Pfizer, and you shift over to those respective charts, you'll notice the kind of bullish behavior that we're starting to see in these particular names. Even from a technical sense, UNH is holding where it's supposed to. It's holding its support. And it's getting a bullish bid, at the very least, back into its value zone over the trading range that's been established for a long time. J&J, somewhat similar, maybe not technically interesting from where it responded, but over the past couple sessions, a major rally starting to occur here, and the volume as a bit of confirmation, showcasing that there is quite a bit of monetary interest coming into the stock. And then, of course, Pfizer, maybe not as volatile, also not as market cap important, but definitely seeing at least a 2-day bid off of a relative area of support. Our deepest sell swing here indicates that this low is of a lot of importance, and we're getting pretty close to this area with our major value sitting a couple of dollars ahead of us at about 52.70. So what does all this mean? What should we be doing as market participants? I would say that this definitely needs to be proven a bit more. If you're looking at just XLV, whenever we had the sharper CPI data readings and the larger sell-off, XLV took it on the chin just like most other sectors. In fact, we are technically trading underneath a stronger support, and all this bid has done is back tested us back into this area. What's interesting, though, is that if the market can reclaim, if this turns into just an oversold reaction with the rest of the market, a lack of sort of conviction and transactional liquidity to the downside, and big picture, if we see a turnaround, the weekly kind of highlights how this isn't engulfing at this point in time, then the market can easily reclaim that support. And all it would need to do is start to circle back in, likely back test, and then of course advanced in some sort of weekly uptrend. So something to prepare for, something to keep in mind as we move into the latter half of the year. This is something we'll look at more next week, and of course at the start of July. But when looking at where to put your money, where to put your bets, you need to sort of assess what the market is advertising, and the fact that energy, from a technical sense, doesn't have the same look and feel to it. It might, of course, reestablish bullish uptrend behavior. It might sort of reclaim those moving averages through longer periods of consolidation. But if you're looking to maybe go into the next potential bull market or potential bull area of the market, this might be something to pay attention to and monitor as we see the shifts starting to form. Another quick note there in regards to shifts taking place in the market. One thing I've been keeping a close eye on is, of course, the bond market. And throughout this predominantly, deeper downtrend inside of bond products, the sharper bull market inside of interest rates, aka uptrend, there's been quite a lot of volatility in both directions, of which we're looking to see if there is going to be a much stronger inflection point for the market to use as basically a risk level. Short term, it does look as if the 10-year treasury is putting in another relative top. We do have, at the very least, a weekly confirmed pivot where the market, as long as we're staying below this topping tail area, is seeing, a reversal structured pattern. And while we haven't changed the trend, we are seeing the potential for this uptrend to form, behavior that can structure us against what has been essentially straight up behavior or uptrending behavior. So all that means is, looking at bonds, we're kind of seeing some bullish activity. If you're looking just at the weekly, you'll notice that we do have a confirmed weekly bounce starting to transpire. And all this requires is a weekly candle. And then, at least at this point, we're getting some trade above that weekly candle. Of course, a closure above this would be a very strong confirmation that we are starting a weekly bounce. Big picture, though, there is the idea that this is still in a downtrend. I do agree. This has a lot of proving to do, but once again, we're noticing these shifts early. We're trying to ascertain maybe some future behavior based on this this indication of change. And if we do see a little bit of a retracement inside of interest rates, that can obviously put some bullish thematic inside of the S&P. With bonds going higher, interest rates coming back down, there may be a bit more of a interest inside of more growth aspects of the market, i.e. things like tech and discretionaries, along with just the alleviation of what has been a fear reading of the market, which is the speed of interest rates going higher. So as always, something to keep an eye on. I definitely think that this is something you can trade as it comes. Obviously, the more oversold bonds get, the more attractive they can be to both foreign and domestic investors. And something that Artie mentioned on one of the closing bell shows is the idea that a lot of investors have been looking to real estate and obviously having some trouble getting cash flow and cap rates to make sense. If you're a property investor, you want to obviously pay very little or a good price for the property relative to what you can rent it out for. And of course, that's going to define things like your cash flow and whether or not you're paying off the mortgage relative to what the renters are paying. Getting that and getting those percentages to make sense has been a bit of a challenge if the assets themselves are high in relative price. Renting price can only go up so much before you have trouble finding renters. However, if you're looking at something like a 10-year, this particular product pays anywhere from 3.4 to 3.2%, depending on when you catch the bounce. And that might be a bit attractive to investors having trouble in other asset classes or having trouble finding that type of yield in other asset classes. So it's more a note from a macro sense of, as things start to get over and undervalued, the market will start to dictate whether or not it's more attractive or less attractive. And that, of course, defines cycles throughout the market, whatever market you're trading. So something definitely to keep a watch on. And last but not least, just to kind of wrap things up, we mostly haven't been talking too much about crypto. I do want to highlight the fact that there are products out in the ETF world that are very good trading vehicles if you need some sort of exposure to crypto, whether it be a hedge or long or short type exposure. The one that's opened up recently with probably the best trading volume has been BITO, or ProShares Bitcoin Strategy ETF. Remember that this is using Bitcoin futures, so it's not going to necessarily be one-to-one with the asset, but if you're looking more at larger trends, of course, this is a fine equivalent. But recently, they also offered an inverse, essentially a short strategy ETF. And with crypto, essentially confirmed in a bear market, along with a sort of macro downtrend at this time, this also can be a potential option if you need something that kind of hedges your net long crypto exposure, or if you're just looking to trade and speculate in this space without going to other exchanges. One thing to note here, though, BITI is a newer product, so there aren't any options available yet. This may change over the next week, so if you are using this product, keep an eye out for the options opening up. If you're using BITO, this is a much more heavily traded option market. In fact, it's actually pretty liquid, and you'll notice that it is traded throughout with some decent open interest. The spreads here aren't too bad. I definitely would recommend kind of inspecting that based on your trade criteria for option trade. But if you're, once again, looking more macro and you just need something that hedges or defines some general risk to the upside or the downside, this is a great product to consider. So with all that said, I think that's pretty much it for today. I'll just kind of wrap things up with the idea that, once again, the S&P is in a high risk zone for shorts. We're oversold in a lot of ways. We're definitely far extended from key moving averages, things that define better risk to reward for getting short the market. And as I mentioned before, S&P bulls have potential to form what is structurally an inverse head and shoulder. It might be a bit slanted, might have sort of a neckline that needs to be defined by price as opposed to a horizontal neckline of resistance. But ultimately, they're trying to circle around in this area. And I think these channel structures are kind of the key. Definitely keep an eye out on this. We might be seeing the early signs of this breakout. This might not be necessarily the week for that expansion, but ultimately the structure is there. And so long as we don't sort of lose our general area of shoulder support, basically our higher low trend that we're trying to form, I think the SP has a decent chance to continue climbing at least back into sort of the mid-channel area of the market, somewhere akin to this chop zone here at around 390. So obviously the upside is there. It's up for the bulls to prove it to us. And as always, just kind of be safe with considering a short in this area because we are still getting lots of gap up opens, or I'll just say gapped opens. So ensure that your stop loss and your risk ranges are appropriate for the types of gaps that we're seeing if you are entering into a swing position. So with all that said, my name is Jared. This is Engineering the Market. Trade safe today. Stay tuned next week for more information about what the S&P is looking like, what the market performance looks like from a sector overview. We'll kind of deep dive into a new half of the year. So kind of looking back 6 months, obviously looking ahead for what's next, and obviously preparing for the trading day. So thank you, and stay tuned for pre-market prep.
All right. Good morning, everyone. Welcome to the pre-market prep. I hope everyone's having an amazing morning. Hope you're having hope you had an incredible day yesterday. Good morning, Peter. How are you doing today?
I am great, Carlos. A little rainy here in town, but hopefully it'll get nice and get some good weather for the upcoming weekend. How are you?
Doing good, doing good. Yeah, here in the Northeast, it has been cloudy. Not too much rain here and there, but yeah, it has been cloudy almost like the last 2 days, seems like. It reminds me a little bit of Vancouver when I was there. It seems like I thought they were exaggerating, but no, they're not exaggerating. It's cloudy all the time.
Yeah,
They,
Vancouver is
yeah,
not beautiful city, not a place I'd
yes.
want to live.
They are definitely missing some sun, and we're talking about how that can affect the way people's moods are, right? With the sun not being out for a couple of days, they can go several days without seeing the sun at all, just for little bits and pieces there, and that could be interesting, that's to say the least. Guys, good morning. Let's take a look at some of the stuff we had here in play yesterday, starting with coin was the first one on our list today. And again, it was a mixed type day. There was some stuff that did very well. Other stuff had their moments where they ran up nicely and just kind of went sideways, back down and back up. So we're still seeing this type of action in many of the tickers we were watching yesterday, and we have been watching over the last couple of days. The spies, as you know, is looking good today. Jared went over that this morning. Just give him a thumbs up. It's funny. Speaking of thumbs up, by the way, we'll talk about that in a second. I think yesterday's pre-market show got to 4.99. I was like, are you kidding me? There's not one more person that wants to hit this thumbs up here. It was 4.99 on the dot. I think I took a screenshot of it. I'll show you guys in a second. I'll pull it up later. But it was just so funny. So here it is, guys. It took off nicely here on coin. Tesla did the same thing here, and I found Tesla to be a better trader. So that was my trade yesterday. Let's see. Let's change the color. That's a little bit better. And again, this one also traded like that, and again back down, as you are going to see in many stocks here. Actually, on the other hand, it was just complete chop the first half hour, just up and down action. You got some pretty good candles overlapping the previous candle here. The wicks were a little bit aggressive. So again, just overall messy here, just trying to figure out what's next for this. So finally does get going nicely here, breaks out of the highs of the day here. So that could be an excellent strategy here, especially after you tested it 1, 2, 3, fourth time as a charm there. You can see how nice that plays out. So a couple of ways to play that there. We had Lee on deck, which actually surprised me. Had a beautiful pre-market activity, and then here just kind of sold off, very aggressive. But again, here you're getting the sell-off, and then you get the bounce, right? So if you miss this sell-off here, if you're not scalping, it can be tough to kind of get a continuation, which is hard to see that when, again, we're doing a lot of this back and forth, back and forth. Tesla had a beautiful start, guys. Look at this beautiful pop here. Does drop down, then takes off. So that traded very well. Actually, no, Tesla was not my trade. My trade was on Baba, actually. But Baba's what I meant to say. Baba here, you can see a beautiful open range breakdown. Break up on the 5 minute, and then you can see the drop here. And this was at the previous day close, so it was a clear indication, hey, we might be getting toppy here. And you can see how well that drops down. It goes back up and retests that. Here you got a nice double top as well. And you can see how that drops. So again, you're getting some movements. You're getting a couple of stretches within this up and down, but your entry has to be on point. If you follow us on Twitter, you'll see Craig had an amazing trade. His entry was just perfect. He was scalping. It was a scalping strategy, but he just had the perfect entry, which allowed him to do very well there. So you can see that over on Twitter. So that was the day yesterday, guys. The SPY this morning, we are. Go ahead, Peter.
Couple of, if I could just mention from yesterday, because I
please.
just want to mention a quick point. If you could throw up the chart for Apple, I did my main trade on Apple yesterday,
Nice.
and it's I just want to say, we tend to think of day trading as something that is focused on the open, right? And especially a lot of new traders, they think when the bell rings, you got to leap into a trade. And I do my worst trading at the open. I wait for signature setups and opportunities, and a lot of our successful traders have very different strategies, and some of them can show that patience and get good success. So for me, I have my signature mountain pass move, which I wait for the setup, which happened at almost 11 o'clock. It was like 10:30, 10:45 when it set up. I was able to take that for the move down. You can see there. So it ran up hard. Didn't bother me that I missed that move up, because the setup was not something I could take advantage of. I just waited for my opportunity and then was able to get in for the turn down. If you just mentioned Twitter, Carlos, if you flip to AMD, one of my other favorites, but not the one I traded, but Megan, who's one of our moderators here, now she posted in Twitter how she got a wonderful move on AMD that started only in the afternoon, around 2:30. And if you sort of go 2:30 to 4, you can see how that sort of moved down towards the end of the day. And she was patient. She waited for this move, and she got a great move there. So is it the biggest move of the day? Absolutely not. But she waited for what she was looking for, and when it happened, she executed her strategy flawlessly and got a move that turned her from a red day into a green day. So I just wanted to highlight those to say, when we set these levels up in the morning and we talk to you about the stocks that are in play, it doesn't mean you need to jump on them right at 9:30. What it means is we're giving you a target place to watch so you can look for your setup, whatever that may be, whatever your strategic approach is to the markets, and then wait for the right moment, whether that happens at 9:35 or 3:35. So there you go. So let's get into what we've got today. Oh yeah, there you go. See, there's Megan's trade as posted on Twitter. And I said, great trade, right? Like, this is what she was looking for. This was her setup, and she took full advantage of it. So, I love looking at these trades. I love when our members post these things because they happen all day, every day. And sometimes, again, we get lost in focusing on, just the stuff at the open. That can be the hard. Like I am actually very poor at trading the open, so I've had to learn a different strategy. So, all right then.
As you know by now, we call you the closer. You're like the best
closer. I know. I do.
After...
I often tend to get my best trades into the close, the last hour of the day, only because by then I know how a stock is moving. I can manage my risk much more tightly, which means the reward compared to the risk actually gives me a much better return. The move may not be as big as the open, but I can sort of take a tighter stop, which means that it doesn't have to move as far to give me a bigger return. So I mean, the closes, I like it. I mean, it doesn't mean there's a trade every day, but when it's there, I'm trying to make myself ready to execute on every day.
Yeah. Here's David. And Peter, not getting into trouble early allows you to see your strategy set up more clearly. Cannot agree with that more, guys. So again, guys, try different things. Try different things. There's so many things you can do out there. That's the great thing about the market. There's so many ways you can trade this and be successful, right? So definitely give a couple of things a try. See what's working. Don't be afraid to wait 15, 20 minutes, an hour, to find what works for you. So yeah, absolutely.
There you go.
All right, guys, let's get to our gappers list this morning. So today we are in the green a little bit. Again, the market is up now, and it's funny. The market, I think, we gapped down twice, but rally the last couple of days. So there's been some kind of strength showing here. We're not going to go through that because Jared did an amazing job doing that this morning. But yeah, interesting the way it is setting up now. Today we are
Maybe just two items of note on the market overall, just so we can look at it first. Like you mentioned, Jared did a good job of doing the detailed analysis, but just for those that may have just joined, keep in mind, this is day 2 of a Powell testimony. As expected yesterday.
You're going into the market pause. So yeah, gotcha.
Yeah, sorry.
Yeah.
Was I jumping ahead of you? I thought you were moving right into individual stock review, so my bad. But Powell is speaking at 10 o'clock. It's the House committee now that he's addressing. Sometimes you get a little more interesting questions. It's not as political a format, at least of the way the questions are formed, but I still don't expect a huge market reaction, as Powell's been very careful on his comments to make sure that he doesn't spook the markets. So yesterday we saw largely was a non-effect because there was testimony yesterday morning starting at 9:30, today at 10. I don't expect to have a huge market impact either. No other big news happening today. We have a lot of little interesting news tidbits that we'll talk about when we get to the gappers, but no big news that's going to move the market. So we'll see what happens on this Thursday. I'm actually excited. This is the type of day I like best, right? We're not gapping significantly. We've got some news articles, but nothing major. It means that hopefully if we get good volume, we can get some good movement on whatever your target stock will be today.
Yeah, I agree. I mean, some people like Norm, for example, he does not like huge gap up or gap down days. Right. For him, those are problematic. Problematic. I can't speak to
easy for you to say.
Here we go, guys. So gapping up this morning, we have a few on here. Low flow on the top there. We got some stuff between these levels of Baba food too. So again, regular stuff that we've been seeing. I see some of the Chinese stocks are quite overtaking this list a little bit here, Peter. So maybe there's some stuff happening there. But I see Neo is on here. We have Baba, we have Futu, we have XPEV, Lee. Becky, I believe, is Chinese as well. So again, they're kind of, is everything Chinese here for the most part?
No, not everything, but a lot of it is. Yes.
Yeah, yeah. Okay. And then Revlon, which was again had huge volume yesterday. We had it on our watch list as a secondary, and I did not really look at it. So we'll take a look what's happening there. They're down today 4%. And again, lower flow stock that has been getting
Yeah.
a lot of activity.
Revlon. Meme stock.
Yeah, yeah. Christopher MC is saying Peter is on fire today. No, man, Peter's on fire every day. Every day. It's unbelievable. So all right, let's get to levels, not levels, but market stuff here. So let's go ahead and remove our watch list, Control A, Control X. And let's see what we got here. PEV this morning. So this is up 11.5, 708,000. It's got some good volume to it. I do not like the daily. Looks like recent IPO. Yes. Recent IPO on the 8th. So not a whole lot to go by on this one. I tend to stay away from something like this. Phoenix Motors. Yeah, unless there's any crazy news on this, Peter, I'm not going to be watching something like this.
What is this? No, I don't have any specific news on that.
All right, we'll move away from that, which is recent IPO is getting some activity this morning. Here is a SIGA. SIGA, what do we have going on today? We're up nicely, 7.3, 1.9 million shares traded so far. So this thing got going. Is this the SPAC? It looks like a SPAC. I think we might have spoke about this this week or last.
They're a drug manufacturer, healthcare. It's getting a bump because there's rumors that the EU is going to sign a deal with them for their monkeypox vaccine. So but it's speculative. So, that always makes it a dangerous move. Like, there is no contract. You could get news that the contract is signed and the thing continues to go up, because look how much it's up with the big volume this morning. Or you could get news that there is no deal, or at least denial of a deal in process, and this thing could drop. So just, it could be a good trading opportunity. I've sort of got it on my secondary list, but it's also expected to be volatile.
Yeah, absolutely. I want to answer this question here because it's a good one, and I hopefully we can see a lot of you guys over in our meetup on NYC. I don't have the exact location, but I think we nailed down a place already. I saw an email, so we might be seeing something later today on the RSVP link. So just be on the lookout for that. It is going to be around Midtown area, so that Midtown Manhattan area. That's where we usually have these meetups. So again, we'll have the exact location for you guys today. I think we're just in the final booking stages of that. So
we like to do it like a rave, right? It's a secret location, the last minute.
Yeah.
And then we produce.
Yeah, don't book your hotel yet. Just be in the area,
Exactly.
All right, guys. So we are good to go. Let's take a look at the next one here. Snow, SNOW. This is up 6%. And this has dropped down a lot, because I remember this being at like 300, 400. And it is not the greatest trading stock. The volume is very, very light, and it can be very spotty. I don't see anything that has changed to make me want to watch this stock. I mean, they're up 5.6. Again, look at the volume, which is very, very light. The spread at times could be $1 or $2 easily. So you just want to be careful with this, right? I'm not going to watch this at all. I don't care what the catalyst is. This stock to me trades so bad. And Peter, I know you've seen this stock because it's been on our gappers list plenty of times. I'm not a fan.
Yeah, I've never traded it myself. There is a couple of pieces of news in case you are watching it. In the market generally, they have a competitor that was acquired, which creates greater competition for them because it makes a bigger competitor net. JP Morgan, however, raised their analyst rating against it. I guess they moved it to overweight. So there's a couple of news articles, items on it, but nothing great that really makes me interested enough to put it on my list.
Gotcha. All right, we'll skip on that one. Let's take a look over on Lee. So here we got the first Chinese. Well, I have Becky up here too. And Becky is up 5.8, 151,000. So not a whole lot of activity in the pre-market, but you're getting this gap up that seems to be across the board. on a lot of these Chinese stocks, right? We have Lee, which is gapping up 5.4. We have XPEV, and I know the EVs got their own thing going on. Peter, we can get into that in a second. We have Baba up here as well, which is up 3.7. So I mean, they're all just slightly up this morning. Any overall news, Peter, or what do we have going on here?
Yeah, so we're seeing all the Chinese offerings, go up or at least be active in the market this morning because the Chinese president Xi Jinping has in a speech, he made a commitment to meet their economic goals for the year, despite all of the COVID-19 closures. So no specifics about how they're going to meet those goals, but generally that's expected to mean that they're going to either loosen some of the sanctions or some of the rules that they had on the Chinese companies, such that they can get back to economic health and keep their economy growing. So that's why the stocks are generally moving up. I expect to see continued volume throughout the day, although I don't know if it's going to continue to drive it up. It may become choppy on volume.
Yep. I'm gonna put two that I really like on here. It's gonna be Baba, of course. We'll put that on deck. 936,000, so already up 3.8. And Neo. Neo is one of the ones that I really like to trade. This morning, 2.5. Although XPEV and Lee are not falling too far behind, guys. These two have actually been okay lately, especially not much XPEV compared to Lee. Lee has actually been pretty nice. They're getting some decent volume, some decent moves. So could be a day where I watch maybe one of these, maybe Lee instead of Neo. We'll see. All right, heading down, we have more Chinese tickers. I'm only going to add these two. I'm not going to go crazy with them. But we have Oxy here. Had a rough open, then it got going. This morning, they're up 3.4 and 446,000. I think it'll be a good one to watch today. Let's see what it does there. We have Robinhood up 3% this morning. Looks like they got a little bit of action this morning. Seems to be news, because usually when you get that type of activity at 8 a.m., what seems to be an increase in volume, could be something happening there. I know they had layoffs last week or 2 weeks ago. Not sure if that took place or they actually executed it now. Maybe that's what's causing that. But for the most part, do you see
Yeah,
anything good?
it's an interesting situation for Robinhood. Over the last week or so, there's been a lot of talk about their cash to value ratios. And if you don't follow that, basically they're saying that the market cap of the company has fallen below the value of their cash in hand. So in theory, you could buy the company with their own money. So that is just making the I guess it's creating some interest from a stock perspective. Doesn't mean that they actually have a suitor out there, because there's still a lot of risk in this stock. So I don't, it's another one of those. It's on the edge of being a meme stock for me, and I just don't like the way it trades generally. So I stay away from it.
I was on mute there. We'll keep that one off for now. We have PDD here. Again, not looking great. I think there's better stocks to look at. We have Neo. And here's Coin, which has been, again, rather active and actually doing okay. I do like this one. Maybe it's a possible today. We'll see where it goes. So we'll put Coin on here. And then heading down to our gap down list, or heading to the left to our gap, or to the right to our gap down list, we have XENE. And this is down 12.3 today, 105. This just popped up. Wasn't not on this list. 50 million shares flow, so a little bit on the higher side. Again, it just doesn't have great volume. So if you are going to be watching this, give it a little more time. Looks like it started happening after hours last night. They got this drop, and now that they're getting the volume, they're popping up on this list, but doesn't really look good at all. And look at the forget this. Look at the volume here, guys. On the last 4 or 5 months, it's all under 2 million. The last couple of weeks has been under a million. So that type of volume, running through $29 to 31, that's not going to be good. I'm not going to want to get involved in anything that looks like that. Here's Revlon, which again has kind of the meme activity that Peter was talking about earlier. They are down there now, 5.4, no shares for sure. So I'm definitely not interested in this. I don't think I was interested even yesterday so much on it. 3.3 million shares traded. So again, it just seems to be losing some ground here. But again, without having shorts for interactive brokers, I'm not looking to put this on the list. All right.
Yeah, this is where these types of stocks tend to get very dangerous. So look at the daily chart. You got that big candle up that happened on what would that be, Tuesday, I guess.
Yeah.
And then yesterday we had sort of a day that ended where it started, right? So you got this big doji candle here, which means that today there's going to be a lot of uncertainty. So this thing could be choppy. You could get a good move out of it, but again, these are the ones that, I'm always biased because I will always default back to my AMDs and my Apples because they're consistent. I know how they move. I'm comfortable trading them, but there's opportunity here if you're willing to take the risk.
Yeah, absolutely. And the question here by Shu, she's asking, how about short Revlon? Yeah, you can take a short if you have inventory available. With interactive brokers, we do not have, and interactive brokers does not allow you to actually purchase shares for short. Some brokers do allow you to do that. But if you can locate this, what's going to happen is, I would love for anyone to try to locate this. And usually when you try to locate stocks, they'll give you a price up front of how much it's going to cost you per share to get this stock. I guarantee this is going to be expensive, right? Because I don't say it's a guarantee short, but it is most likely going to drop. And a lot of people are going to probably want this stock short. If you could get a quote, if anybody has a broker that can do that, I know CMEC can do that. I would love to see what the price is going to be on this. I guarantee it's not going to be cheap. And again, what happens also is, as you mentioned, managing your risk. You can get a pullback that's so aggressive that even though you are right as a short, look at this pullback right here, and we're only in the pre-market, you could be wrong. It's just for that time frame, for that period there, by getting stopped out, right? So you just got to be so careful with this thing. You got to have an edge, right? Just don't look at this, say, oh, this thing is a clear drop. This thing is going to fall off the face of the earth here. You got to have a strategy. If you're just doing that, then you're kind of slightly gambling a little bit, and you will get lucky here and there. But for the most part, that's not going to be a long-term strategy. So be very, very mindful and truthful to yourself on what you're actually doing when you're saying, hey, I'm just going to take this short because it looks weak. Okay, look at your trade book. Is that really on there? If it's not, then you got some questioning to do to your strategy there. Okay, guys, we are all set. Peter, what do you like this morning? As Redbox, Norm's favorite stock, appears here on the gapping down, but it's not looking great. So what do you have this morning that you like?
I'm not sure that I like them, but a couple that'll mention just because they have news this morning. JP Morgan announced they're laying off or going to repurpose about 1,000 employees out of their mortgage division. So not seeing any action out of JP Morgan so far this morning. Tesla, Tesla always has news. Today they were reporting they're losing billions out of 2 of their factories out of Europe because of a shortage of parts availability. So that may be a drag on Tesla, but whenever I say that, it tends to buck the trend and jump. Abbott Labs has been a lot in the news in North America recently because of the baby food shortage that is happening.
Yes,
and it's largely driven by Abbott Labs because they've had a big factory that I didn't realize produced a significant percentage of the U.S.'s supply of baby formula that had some, I guess it was like sanitary health issues, and it got shut down and opened up and shut down again. Anyways, there was news this morning of another death potentially due to bad formula. So, I'm not seeing, again, any action on Abbott Labs right now, but if you like that type of catalyst, you may want to keep an eye on it. And last but not least, I'll just mention the airline segment is one that I'm going to keep an eye on just to see if it moves. American Airlines had news this morning that they were cutting a number of routes because of a pilot shortage. They just can't, put all the routes out that they need because they don't have enough pilots to fly the planes. And United was announcing they were cutting over 50 routes because of congestion. I don't know exactly what that means, but congestion in the network. So they were cutting a bunch of routes as well. So, is that good or bad news for the airline industry? Honestly, not sure. I mean, from a net traveler point of view, that's bad because it means we've got fewer flights. From a corporate profits, though, that means that they could get better profitability because they can keep the prices high and they'll be at max capacity. So we'll see. Either way, it might mean a little movement in the airlines. That's what I got.
Yep. I agree 100%. Thank you for that, Peter. All right, guys, let's get to our chat. What do you guys like this morning? I see a couple of you guys, Jason, throwing out Meta and Facebook, which actually were pretty decent this week. Meta, again, just dropping here very aggressively. Dropped again yesterday, not as much, but Again, another red day for Meta here, and today they are just pretty much flat right now. But I agree that this can be a nice one. And the last 2 days, I actually traded pretty clean. I didn't have it on the list yesterday, but you guys did mention it because you were watching it. I actually traded very nice, and the day before that was just really, really clean with that sell-off that you, Peter, you brought that up to us as well. And Robert, yeah, the daily does look interesting on this. I mean, we just continue to get slammed here, very, very aggressively. Okay, next we have some Meta Daily. Yeah, Daily's good on this one. Looks very good, Bobby. I agree. MU, what do we have going on for MU here? I haven't looked at MU in a while. AMD, Nvidia kind of take the cake here with this type of semiconductors. I think they're just better traders. They get way, way better volume in pre-market action and also just overall day trading activity. So unless they have any specific news, is there something clearly DRA margins are dropping? Yeah, I could see that being an issue. But I think overall, like an AMD and Nvidia might be better. I think even with that news, I think that's something that we've known on these semiconductors has been an issue with the chips and everything else. It just has been an issue overall for all these guys. So,
Yeah.
you know,
I mean, there's no specific news here. There is a general feeling that these market conditions are going to be good for the semiconductor industry overall, because as recession hits, people look for more effective ways to manage costs, and often you move to AI or the technologies and away from labor. So, typically that's how the semiconductor industry has benefited. We'll see if that happens in this case. But Micron and Nvidia, for example, are two that are expected to potentially see some increase. But that being said, I look at the daily charts. I'm not seeing it yet.
yeah, I agree. Question here, Russ is asking, can you elaborate more why you like days with no gaps? I thought larger gaps are part of the stock selection process. Actually, I like days with big gaps. I know Peter, you don't, and Norm doesn't like big gapping days. I do because I think it stretches out,
Well,
the playing field.
yeah.
But I like days with big gaps. There's some days that the gaps too much, things get extended, and I know Norm doesn't like it. And Peter, you mentioned you tend not to like those type of days, right?
Right. So, and to the way the question was worded, let me try and answer specifically. We have to make a different differentiation between stocks with big gaps and when the market gaps up big, right? When the market gaps up big, often what happens is all stocks get raised by that, and then you end up with choppy price action during the day. Most of the move happens pre-market, so you don't get that opportunity. I like days where the market is not gapping up, but where I can identify stocks that are gapping, because they're more likely to move independently, and you can take advantage of those moves. Likewise, stocks that like I watch every day, AMD and Apple, the moves are going to happen during the market if they haven't had a big gap in the morning. So it's when the market gaps that I usually find that I struggle to identify good trades, and I don't have as good a day. So yes, we still look for the stocks that gap independently. It's the overall market conditions that I want to differentiate. So
Yep. Thanks, Peter. And then here we have MU we looked at again, not great right now. KBM, this sounds familiar. KBM, that's not coming up. KBM, KBM. Maybe you got the wrong ticker. Just check here.
I
KBM.
don't doesn't sound familiar. I don't know what KVM is.
Yeah.
I don't see a ticker for it.
Okay, cool. This looks like I think you're trying to find a stock that really it's horrible. I forget the name of it. I think you put in the name of the actual company. But it does sound familiar. So check the ticker there. We'll look at it. KBH,
KBH.
KBH.
Now
It's
that
different.
sounds more familiar.
KBH. No, this is I don't know what this is.
Yeah, it's a KB Home. I know it every once in a while in earnings it'll show up, but I
Yeah.
can't say I've ever traded it.
No, and look at the volume, guys. Only 53,000. And man, just look at this daily. It's just so choppy in here. Less than 5 million shares per day. Yeah, that's not something you want to be messing with. At least not for the way I like to trade. And for the most part, if you look at to get some activity, this is really not it.
I
Futu, we
can see
looked
why it's
at.
being mentioned. I mean, they
Mhm.
did have earnings, so that's why it looks like they beat their numbers on their earnings. But we're really at the tail end of earnings season. There's not a
Yeah,
lot
yeah.
having earnings. Like for example, Rite Aid (RAD) had earnings. I
Mm,
tried for
yeah,
years to watch Rite Aid, and it has never treated me well. So I purposely don't watch it anymore because I always get hurt.
yeah. All right, guys, we're going to do two more. Then we're going to go ahead, head over to company events and announcements that are coming up. We look at Mickey. You're giving us GGPI, which I think we have looked at this quite a bit in the last couple of days because it's been on our gap up list, or at least you guys been mentioning it. What you said, Peter?
Yes, we did look at it in the
Yeah.
past. It was it had come up last week or the week before. I can't remember now, but
Yeah.
I think it was last week.
I kept it off my list, guys. I just don't like this activity on the daily at all. I'm not sure if with Newsbreak. I'm just not interested at all in the way this is moving. It's up 4.8, 529,000. And let's see how it's been trading throughout the day here. Look at the market open yesterday. Again, nothing happening. Then you get this spike in volume out of nowhere. You're moving very aggressively, between 970 seems like to about 11 with only 7 million shares traded. And the shares are trading so bad. I just don't like the way this is looking at all, guys. This is not the way I want to spend my day trading. It
Now,
looks like, yeah.
just looking at the news on this, I just
Hmm.
noticed today is the day when that merger. If I remember the news now, it was the merger with Polestar, right? So this is an EV play now.
Yeah.
GGPI was a SPAC, but now that they're merging with Polestar, that's going to be focused on the EV sector, which means that people are going to be interested in it like an EV stock, and we know how well those move from LI to NEO to XPEV, etc. So maybe today the day when it starts to give you some good price movement. Yesterday looked like actually a pretty good day for it, so maybe, but again, no sign of it yet. We'll have to wait and see.
Yeah, absolutely. And then one more here. We'll look at FTNT. I see some of you guys throwing that out here. FTNT. What's this? This is Fort. I was gonna say Fortnite, but it's not Fortnite. It's something else. And this is no. This is a no, no,
Fortinet.
no. This is a no, 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 no. This is really untradeable here. I don't know what this is. But yeah, it just no. You don't want to look at that. Okay, excellent, guys. We're all set. Let's take a look over on our community events and announcements. We'll go straight to the website, get you what's happening there. We can look at our webinars page. If you come over here, this will take you to what's coming up for this week and next.
So just looking, I see Fortinet. I was sorry, still catching up on the news there. They had a 5-for-1 stock split that takes effect this morning. So that might change its whole profile, sort of like it did for Amazon. So far this morning, though, 8,000 shares. I would agree with Carlos. No, no,
Yeah.
no.
I don't care how many times they split, whatever it is. This thing traded bad before. It's probably going to trade worse now.
Yeah, it's you're not seeing any sign of it so far. So anyways, like we said, let's take a look at our calendar, because every week we've got stuff going on. Next week I'm going to lead the webinar on Tuesday, talking our strategy webinar with trading a single stock. And you've already heard me this morning talk about AMD. Apple is another single stock type offering that I like to trade. So I'm going to talk about the upsides and downsides of doing that. And that'll be at 8 o'clock in the webinar room for all of our elite members. The week after, my good buddy Carlos here is going to be talking about risk management and go dig into, I guess, his approach on the pre-market analysis. We do it here every morning, but sometimes it's good to know how do we go about that process and set ourselves up to do it, because it's we make it look so easy, right? Because we've been doing it for years. But if you want to be able to do that on your own, let's give you the tools to do so. That'll be at 8 o'clock on July the 5th here in the Bear Bulls trading room. Wednesday is about psychology. Last night we had a couple of great psychology presentations. So looking forward to next week. Randy Howell, as I've been mentioning, is going to be here with us on the 29th at 8 o'clock to talk about how to keep yourself under control, manage those emotions when the money is real and your emotions tend to run high. So pay attention to that. Randy's always got some great insight. And the week after, we have Dr. Kenneth Reed, who is a friend of Bear Bull Traders and has a great offer we'll talk about in a couple of minutes here, who's going to be with us on July the 6th to talk about the 10 things you need to know about bear markets. Obviously extremely relevant, as we are definitely in a bear market right now. Today is Thursday, which means that it's mentorship day, and we have a number of activities that happen, starting with John at 11 o'clock, who's in the webinar room again for our elite members, giving some insight and answering questions. Tonight we'll have Ed at 4 o'clock who's back from he was off yesterday, but back in his room today. One of our 2 active trade rooms throughout the day, and we're giving you some mentorship tips and answering your questions as he does all day, every day. That's at 4 o'clock with Ed. And then tonight we've got Thor, who leads his mentorship session. Always very popular, tons of good questions, where he does some deep dives into his strategies and any questions you may have. That brings us to the end of the week, which will be tomorrow, Friday. And, we are live every day that the market is open, and we'll be live throughout Friday as well. And when we're not live, you can still trade stocks using our stock trading simulator. Go to stocktradingsimulator.com, and not only can you get access to that simulator, but it will give you, things, recommendations as to what you can trade. Sign up for the watch list there, and you can get it pushed right to your email, or you can go check it out on our website, where it's also posted daily. If you like what you see there, hopefully you'll consider joining us. You can join us using the code PreMarket24 for a 1-week trial. That gives you access to our chat room and our onboarding classes, which happen on Mondays, except when it's a market holiday, when it gets moved to Tuesdays. But that'll just give you an idea. Is this the community for you? We have a lot of pride and confidence in what we do, having been announced having one of the best day trading courses in the industry. If you've followed our Twitter or noticed Andrew's posts, that was very exciting for us and a great recognition of what the team does here. And if you do want to join then, you can use the code READ50 to get a discounted rate off of our elite annual membership, plus a free one-on-one coaching session. So hopefully you'll take advantage of that, and we will see you in the chat room soon. With that, let's look at some levels.
All right. Thank you very much, Peter. Appreciate that. Guys, if you haven't done so already, hit that thumbs up. We are sitting here at around 217. And if you guys remember what happened yesterday, can you guys see that? Might need to make it a little bigger. Hold on. It was so funny. I went back to see, did we actually hit 500? And we didn't. We got to like 490. Oh, it was just there.
It was in focus for a second. There it is.
There it is. 499.
499.
So if we could help that number today, that'd be great, guys. Get us up there. 257 right now. That'd be real nice. All right, guys. Thank you for that. Appreciate it. Let's get to some levels, guys. We have, look at my list is very light today. Very, very light. I have only Baba, Neo, Lee, Oxy, and Meta. So we'll do levels for this. If we have time, we can find some more tickers.
Add SIGA on the secondary list there, I think might be interesting too.
SIGA, okay, we'll add SIGA, and of course I'm going to be looking at probably Apple, which today looks actually very active. 1, 2, 3, 4, 5. Yeah, we'll add Apple. Apple is good. Okay, excellent. Let's do some levels, my friends. Let's go ahead and start here with Baba. So we'll delete some of the previous levels, and now we're looking at high of the pre-market all the way up at 110.39. So we'll do a level there, and then we're up 4.2 right now, so that is nice. Looking to retest the highs here, so that'll be something to be on the lookout for. Towards the bottom, we do have low of the pre-market sitting at 108.54, so we'll do that there. Towards the top, we do have 112.60, and then we got a couple of levels here that did very well. The most, I gotta turn off this thing here. I don't know what's beeping. And then we have all the way up here is going to be 118.13. So plenty towards the top there. And then towards the bottom, do not need to add anything. You have the highs and lows for the last 2 trading days, doing a pretty good job there. Let's head over to Neo. Again, amazing volume already, guys. 2.2 million shares traded. Towards the top, we are looking at a 23.48 is the high of the pre-market. And then the lows all the way, actually down here, you have a low here at 22.86. But I like this 23 area here because we did this in a nice fashion here with some volume. We dropped down, found our base around 23, and then we're getting a little bit of a bounce now. So I do like this 22.98, 23 level there as well. Your pre-market's a little bit lower than that, but I think that's worth having on there. Looking at the daily now, above the 23.48, do we have anything? Yes, we do. We do have something over here, over at 23.91, might be 24. And then if you look higher, you also have some more up here as well, looking at 24.89. Towards the bottom, highs and lows of the last 2 trading days. Again, as we mentioned before, my first 3 tickers are Chinese companies. They're slightly up this morning, and hopefully they can rally. Lee is gapping up pretty nice here, guys, up almost 7%. 38.26 is the low of the pre-market. The high of the pre-market over at 39.39. So again, you got a nice range already this morning. And this, if you look at the daily, I mean, it just has been ripping higher here. So hopefully we can get some great volume on here above this 39.39. If we look to the left, we have not been up here in quite some time. It's going to be, that is our 52-week high, guys. We haven't been up here since 2020 November timeframe. So it's been a while, and this is where things start to get really interesting with the EVs. If you guys remember that, it's going insane. But yeah, really interesting right now. What was that?
Right. Oh, nothing. Just singing.
4071, 4209, and then we have a 4412 up here for Lee. So Lee's looking good. Let's look at Oxy, guys. Oxy this morning, we are up 3.4, and we're gonna put a level here at 57.88. And I think once you do that, I think you're set, guys. I mean, highs and lows for the last two trading days, previous day close. You have everything in here that looks pretty good. I don't think you need to add anything. So you're set there. I'm going to leave that just like that. Got some good activity this pre-market already. Let's see how this does at the market open. Yesterday was very choppy, that first 30 minutes to an hour. But if you waited a little bit, again, as Peter is advocates, you don't have to make your money in the first 2-3 minutes, right? You can wait and let things set up. Actually, was one of that where if you waited, you were patient, it really paid off to take that run. Here's Meta, guys. So high of the pre-market, I'm going to bring this down. It's over at 158.14. The low of the pre-market is down at 155. You got plenty of stuff happening here. I love the daily on Meta. As you guys pointed out, I think it looks very, very interesting. We have 155.08, which is the low, some of the lows from yesterday's after hours. Might have been some pre-market activity as well. Yeah, I got some pre-market action there. That was actually the high of the pre-market yesterday morning. So, we'll keep that on there. Let's see what that means for us. And 153 is coming off the big lows on the big gap down we had 3 days ago. So, again, a lot happening here with Meta, guys. Just, again, I can't wait to see how this thing is going to end in a month from now. I mean, it's just does not find any base, and everything that seems to stick to it is all bad news. Here is Apple, guys. Apple right now stuck within a little bit of consolidation. I mean, if you look at the SPY, you look at this, you're basically they're a mirror of each other at the moment. So, but Apple still, even with that, is a good one to keep an eye on. As we mentioned before in the past, you can trade this very well one way or the other here, depending on how the overall market is doing. As far as levels, highs and lows are doing a pretty good job for the last two trading days. They're covering your high of the pre-market, low of the pre-market. If you look outside of that range, we do have a level here around 130, recent lows, and then towards the top, we do have another one here at 140. But again, I'm really looking at this one and just looking at the overall cues and the SPY and seeing how things are going there. And this could be a good ticker to trade. All right, 358 likes, guys. Appreciate that very much. If we can get to 400 is our goal every day. If we could get to that, really, really appreciate it. It means a lot to us over here. Peter, anything else that we might have forgot before we head to our moderators list?
No, I think we've got it covered.
All right, sweet. Let's go ahead and bring this moderators list here. Let's see what people are watching. As I am doing this, Peter, maybe you want to read off your list. I'll resize this over here.
You bet. So look, we're starting to see some IPOs come back. That's something we also track in the room every single day. Yesterday we had one that came out, but super low volume. Today, MOB is the only IPO I've got, and no SPACs. So I don't think it's going to be a great one, but it's good to see some offerings starting to hit the street. For my watch list, I'm going to be watching AMD, of course, Apple, and LI. Secondary list is going to be American Airlines, or maybe UAL if it comes up. SIGA, SIGA, and I think I'm also going to keep an eye on the Chinese stocks through BABA.
Yep, absolutely. And then we have Dima, guys, looking at Oxy, Lee, BABA, and Apple. Susan will be looking at Oxy, XLV, Apple, and Amazon. Secondary list, overall market, BABA, and Meta. And then Brian, as he's getting ready to trade live, he'll be looking at Lee, Tesla, Meta, BABA, and XENE. And Mega will be looking at PDD and Oxy. So, guys, looking pretty good. We're 3 likes away from our 400 goal, so that is looking nice there. We should be able to have a good day today now that we're getting close to our goal, 399, and let's see if we can get a breakthrough here on this resistance level. There it is. Very nice. Last question here we'll take care of before we hop off, guys, is going to be Ando is asking, pre-market level is relative. Is there a percentage that you consider on something, for example, like Neo has about 2 million shares pre-market on average, 50 million per day. And that is, yes, we do consider that. And we're not looking at a specific number, but we watch Neo so often. We watch some of these tickers so often that we know when their volume is pretty significant. So for example, if MU were to have, 700,000 on the pre-market, that is extremely high volume for MU. 700,000 on CCL, on Neo, on even Apple at
AMD.
times, AMD, Nvidia. Actually, no, I take not Nvidia. AMD, Apple. That's okay volume, but it's not over the top volume because these companies get heavy volume all the time. Now, if MU has 700,000, then there's something's up today because that is a significant volume for this ticker. So you can look at that percentage. I don't know what that percentage is, but we've been doing this for so long, Peter, that we just look at it and we know for a matter of fact, okay, this is good volume, this is not. If you get a stock that normally does not get that you're not watching regularly, like the ones I just mentioned, let's say you get like I'm gonna pick out Siga, right? What you can do is a quick indicator is you can quickly look down at the daily, right? See what they do on the daily, right? For example, this one does 7 million, right? Looks like on a regular basis. Today in the pre-market alone, they're doing 2.4. Okay, that's significant volume for Siga today, right? So this is something where that could be in place. A quick indication of, okay, are we doing more than expected volume on something? So,
Yeah.
all right, guys.
A general
Yeah.
visible way to do it without worrying about the actual volume, whatever it may be, is look at a 1, 2, or 5 minute chart. If it generally looks like the stock is already open, the bell's
Yeah.
rung, then
Yeah.
then from about 7 o'clock or 8 o'clock on, that's when it's probably in play where you've got some decent price action. SIG is a good example, right? The 5 minute chart, that could
Mhm.
be an open chart
Yeah.
from that point that Carlos
Yeah.
just drew. So then okay, this might be decent.
All right. All right, guys. Excellent. Let's hand it over to Brian as he trades lives this morning. I got a poll going on Twitter. For you guys to go to this link and tell me what you think. I'll ask the question: is your day trading performance better or worse during the current bear market compared to previous bull market? So far, it seems like we're even out. Better and worse is not that far off. So we'd love to see a vote on there, guys. Take care, trade safe. We will see you tonight for all the mentorship we got going on, and tomorrow, Friday, to end the week. Remember, there's no Jared injury in the markets tomorrow morning. We'll go straight to 8:30 with Peter and I as we close out this week. And Peter, thanks so much for covering this week, man. Appreciate it.
Always a pleasure, Carlos. We'll talk to you tomorrow and talk to our friends in the room later today.
All right. See you guys.